A very good late evening. Today we are going to discuss about how to measure national income. And in this discussion about how to measure the national income, there are basically three methods that we are going to discuss one by one. The first method will be income method. Then we will be discussing about the expenditure method, and finally we will be discussing about the product method or value addition method. But before going into these three methods, at first I will discuss about what are the possible ways by which you can go from GDP at market price to NNP at factor cost. That means what is national income? Whenever we are talking about national income, what do I mean? So basically national income means NNP at factor cost. We know there are multiple terminologies. In the previous lecture we have discussed about these things, that there are multiple terminologies like GDP at factor cost, GDP at market price, NDP at factor cost, NDP at market price, etc. Now there might be a question that which one is the national income? When we talk about national income, which one is the national income? Is it GDP at market price? Is it GNP at market price? Is it GNP at factor cost? Which one is the national income? Is it NDP at factor cost? Is it NNP at factor cost? So the question to this answer will be NNP at factor cost is basically termed as national income. Now suppose GDP at market price is given to you and you have to reach NNP at factor cost. How will you reach it? How will you go from GDP at market price to NNP at factor cost? That is we are going to discuss here at first. Okay. So before discussing about all these things, I am going to explain the three methods of measuring the national income, starting from the income method, then the product method, and the expenditure method also. So before explaining this, how to get NNP at factor cost from GDP at market price, let me explain some of the things. So if market price is given to you and you want to go to factor cost, you have to basically add subsidy and subtract taxes. So that means if I add subsidy and minus or subtract taxes, then what will I get? I will get factor cost. Okay. Let me just see, is it visible or not? Yeah. So okay, sorry, my screen got broke a little bit. Yeah. So this is the way in which we can actually go to the factor cost from the market price. We have to just add subsidy with the market price, and taxes we have to subtract the taxes from the market price, and we can easily get the factor cost. I will also explain it by the help of numericals, that how it operates, so don't worry about that. Next, if gross, okay, this is much more okay, if gross is given, that is gross domestic product or gross national product, and you want to go to net, then we know this thing, that we have to just subtract the depreciation from the gross. If we subtract depreciation from the gross, we will basically get what? We will basically get net. And finally, another conversion that we have to learn, that is if suppose mm, domestic is given, this is also much darker, sorry. If domestic is given and I want to go to national from domestic, that is suppose gross domestic product is given and I want to go to gross national product, sorry, then how can I actually arrive from gross domestic to gross national? So for that I will be basically adding net factor income from abroad, and I have discussed about this net factor income from abroad in the previous class. There's this net factor income from abroad is basically nothing but how much amount entered in India minus how much amount of money went outside from India. That is basically our net factor income from abroad. Okay, so we have learned about all these things, that how to calculate these conversions. Now if I want to go to NNP at factor cost from GDP at market price, how can I go? I will come to that, but before coming into that, let me explain how I have explained this, that a market price is basically nothing but if we add subsidy with the market price and subtract taxes from the market price, we will get factor cost. But how is it operating? Let me explain it with the help of a numerical example. So there are 4 factors of production, as we know: land, labor, capital and enterprise. And suppose a production or a farm has 2 land, 10 laborers working, 5 capitals or machineries and 1 enterprise. And rent of the land is 200, wage of the laborers per laborer is 500, interest of the capital is 20, and profit of the enterprise is 300. So these are basically the factors of production: land, labor, capital and enterprise, and these are basically the income of the factors. Income of factor land is rent, income of factor laborer is wage, income of factor capital is interest, and income of enterprise is profit. And we, from the perspective of the producer, we can also say that this factor income are basically the factor cost. If we are seeing from the factors perspective, then it is income of the factor. And if we are seeing from the producer's perspective, as they have to pay or they have to bear the cost of the factors, so from the producer's perspective it is factor cost. So now cost of land is rent, labor is wage, and capital is interest, and enterprise is profit. So what is the total factor cost? As we can see from here, that 200 into 2 total, if there rent on, okay, I think I haven't taken it, 1 minute, 300, 800, okay. So what is the total factor cost of land? That is 200. Total factor cost of 10 laborers are 500. Total factor cost of 5 capital is 20, and total factor cost of the enterprise, that is profit, is 300. So if I add total factor cost, that will be 300 plus 20 plus 500 plus 200, and it is 1020. Now suppose when that product made by the this cost is basically to make one product. Let me take it as to make one bag. This cost is to make one bag. Now market price of that bag is suppose 1200 rupees. Now you might think that why this additional 180 rupee is added, because the total factor cost was 1020 rupees. So why is it 1200 rupees? Why are they selling that product in the market at the price of 1200? You might think about it. Some might say that they have added the profit with the factor cost, that's why they are selling it on a price of 1200. Well, I have answered to that. The profit was already added, right? That 300 rupees, that was the profit, that was the earning of the enterprise, was already added in the factor cost. So why they have added additional 180 rupees? That's because there was tax that the government has imposed on that production company or on that farm. What was the tax imposed by the government? That was 300. So the company or the production farm has added the 300 rupees of tax with the factor cost. So it now become 1320 rupees. Government in some other ways have given subsidy to the company. That subsidy can be in the form of advantage, in the form of money, in the form of benefit. But the government has given a subsidy of worth 120 rupees to the company. Now they are thinking that okay, so we can subtract or we can leave that 120 rupees from the factor cost. So they have subtracted from subtracted that 120 rupees from their factor cost, from that total sum of 1320. So that has become 1200 rupees. Now this 1200 rupees is basically the market price which was shown. How this market price was derived? Well, this market price was derived by adding tax with the factor cost and subtracting subsidy with the factor cost. So look at this. This is the factor cost. We have added tax of 300 with the factor cost, right? And this then subtracted subsidy from the sum, and we are getting the market price. So can I write from here that factor cost plus tax imposed by the government minus subsidy? Why are they adding tax with the factor cost? Because the company or the farm is not willing to pay the tax. They want that the tax should be paid by the people who are purchasing the product. So if they are thinking that the product, if they are thinking that the tax should be paid by the people who are purchasing the product, then they will try to put that tax on a market price. They will try to add that tax with their cost so that it becomes a part of the market price, and that tax is being paid by the consumers. Why are we subtracting subsidy from it? Because the company thinks that the government has given us some amount of subsidy, and that subsidy will not be included in the market price as that money is being received by us. So we should exclude it. We should not put it in the market price. So if we add tax with the factor cost and subtract subsidy from it, we are getting market price. Now as I have shown it from the numerical example also, so this is clear. Now it can be also written as factor cost equals to, if we take the tax on the left hand side, so it will be market price minus tax plus subsidy. Now try to match it. This is the same thing which I have written in the above portion, that factor cost equals to, look, factor cost equals to market price plus subsidy minus tax. Okay, so I hope it is clear. Now the question that was actually given to us, that how to derive or how to get GDP at NNP at factor cost from GDP at market price. So we are going to derive that now. Okay, let me go to the below part. So basically, suppose we are given with GDP at market price, and what is our target? Our target is to reach NNP at factor cost. So at first I will try to convert this market price as factor cost. So at first I will try to find out GDP at factor cost. So for finding out factor cost from the market price, we already know what should we do. For finding out factor cost from market price, we have to get tax added. Sorry, subsidy. Let me just show you once again so that you can remember this. Look what we have done here. As I have told you that from market price to go to the factor cost, we have to subtract the tax and add subsidy. So we want GDP at factor cost, right? So we will basically 1 minute. So we'll basically do what? We will subtract tax and we will add subsidy, right? So from market price to factor cost, if we want to go from the market price to the factor cost, we have to subtract the tax and add the subsidy, right? So that is what the thing that we have done here also. Now we have reached GDP at factor cost. Now from this GDP at factor cost, I want to go to NDP at factor cost, gross domestic product. This G has changed. At first this let me just show you. At first this market price turned into the factor cost. Now we are basically turning what? Now we are basically turning this G gross into N, that is national, gross to national. So for turning gross to national, what should we do? We already have discussed about it, that for turning gross into national, we have to minus or subtract depreciation. So we have subtracted the depreciation part. Now from gross domestic product, we have reached net domestic product at factor cost. Now from the net domestic product at factor cost, I want to reach NNP at factor cost, that is net national product. Here on which part we have made a change? Here we have made a change on this part, that is domestic is now converted into national, right? So now to get NNP at factor cost from NDP at factor cost, we have to basically do what? I have already shown you that if you want to reach NNP at factor cost, if you want to reach from domestic to national, here I have shown you here, right? If you want to reach domestic to national, you have to add net factor income from abroad. So we have to do the same thing, that is we will basically add net factor income from abroad, and by adding this domestic will basically turn in national, and this net national product at factor cost is basically what? Is basically this, which is nothing but our national income. In this way we can get national income even if we have GDP at market price, or even if we have, I mean my point is basically that whatever we have, whether we have GDP at market price, GDP at factor cost, GDP at NDP at market price, NDP at factor cost, we can easily reach NNP at factor cost by following these methods. You have to just remember these three things which are listed here below. Let me just highlight it once more. These are the three things that you have to remember. That gross, from gross to net you have to minus or subtract depreciation. From market price to factor cost you have to add subsidy and minus tax. From domestic to national you have to add net factor income from abroad. Now I will be discussing about how to calculate national income. There are three methods: income method, expenditure method, value addition method. Now income method is basically a very simple method. In the part of income method, there are four factors of production: land, labor, capital, and enterprise, and we have to add all this income of all the factors of production. That means, suppose in India, if I take an example, I always try to give examples so that it becomes easier, and whatever I have taught you in this process will be very helpful in solving the numericals. You will get an idea about how helpful it is when you are actually solving the numericals. So we know there are basically four factors: land, labor, capital, and enterprise. And suppose they are in totally in India, suppose there are four laborers, four land, sorry, five laborers, capital is 2 and enterprise is 3. Okay, just an imaginary concept that I have taken here, whatever. Now these factors has some income, right? If I take an example, suppose of land. So what will be the income of land? So the income of land will be rent, right? As we know, the income of land is basically rent. So what will be the rent of land? Suppose it is 200 rupees. Land of rent of 4 lands. Or even if I want to take it a simpler and much more easier way, suppose okay, let me just delete it. Okay, so suppose rent is 50 rupees per land, and if I talk about wage of laborers is 100 rupees per laborer, and interest of the capital per machine or per capital is suppose 50 not 25 rupees, and profit of the entrepreneurs is suppose 10 rupees. Now what will be or how to calculate the national income? So in this method, uh, that method which we call as method, in this method if you want to calculate the national income, in that case add the factor income, add factor income from all the factors. So let me just write factor income. In case of India, if there are only total 4 land, what will be the total factor income? That is 200, 4 into 50. If there are total 5 laborers, what will be the total wage in India? That is 5 into 100, 500. If there are total 2 interest, right, total 2 capital, what will be the total interest? That is 50. And if there are total 3 enterprises, total profit will be 300. So if I add this factor incomes, if I add all these factor incomes, it will be 780 rupees, and that 780 rupees will be the national income of India. So in this way, by the help of income method, we basically calculate the national income of India. But although it is not, I have explained it in a very simple way, it is not that simple. There are some complexities, but at the end I will show you that more or less the method is actually uh, the same whatever I have shown you in the earlier segment. So there are 3 components that we have to add in case of, at the end I will show you that how can you actually relate to this concept, how can actually you relate that in income method we are actually adding this rent, wage and interest and profit. At the end I will show you, but before showing you that, let me just go through this part. There are basically 3 part or 3 component. One is compensation to the employees. Okay, second part is operating surplus. Third part is the mixed income. Okay, this is the second part, operating surplus, and third part is the mixed income. If you add these 3 parts, if you add A plus B plus C, A plus B plus C means suppose the compensation to the employees in India is 2000, the operating surplus in India is 500, and the mixed income in India is 30. So you are getting 2530 rupees. 2530 rupees. Okay, look, as I have said, this is the part A, this is the part B, this is the part C. If you add these 3 parts, you will get NDP at factor cost, net domestic product at factor cost. But you might ask that I want net national product at factor cost, as we know that our national income is basically net national product at factor cost. So you can easily derive net national product at factor cost from this, right? Because net is already here, product is here, factor cost is here, you have to just change this domestic. And how to change domestic from national, how to change the domestic to national? We have to just add net factor income from abroad, right? Now let me break down these 3 parts, which are compensation of employees, operating surplus and mixed income. In the part of compensation of employees, there are 3 sub parts. One is wage and salary. Wage and salary, which are basically received by the employees who work in a company or who work in a production process. Whatever salary they receive is basically wages and salaries. Suppose in India there are 500 laborers working currently, and their wages and salaries received are totally suppose 60,000 in total. I am just taking small numbers so that I can easily interpret and explain. Second part of the compensation of employees is employers' contribution towards the social security. Okay, so basically I hope you all know the difference between employee and employer. Employee is basically who is working in a company, and employer is basically the person or the authority who are making them work. Suppose I have a production process, I am the owner, and I have 5 people working under me. I have selected those 5 people and who are working under me. In this case, I am basically the employer, and these 5 people who are working under me are basically whom they are employee. So now employer's contribution towards the social security. Being an employer, I have to think, or I have to take care of the some of the special things. What are those special things? If suddenly one of my employee get injured during the production process, I have to take care of that employee. If suddenly one of my employee gets sick and dies by any kind of accident or any kind of thing, I have to pay a sum of rupees to his family. Even I have to make sure that within in a year or in 2 year, I try to arrange some better opportunities or some traveling, I mean some tours and travels for my employee, so that they can work better, right? So this type of arrangements I have to do. So now for making this type of arrangements, I have to save some amount of money. I have to prepare some amount of money in a fund, because I cannot suddenly do this type of expenses, or I cannot suddenly make this type of expenses or allow this type of expenses. So for that, being an employer, I have to make a fund, and in that fund I will slowly save money, right? And whenever any requirement, any urgency, any problem arrives, or any tour and travel are required to be done, I will take the help of that fund and withdraw the money and do that thing. So I am making a contribution in this fund as a social security, towards the security of my employees, so that if they get any problem in their life, that can be related to their accident, that can be related to their sudden sickness, I can contribute. So my contribution as an employer, my contribution towards the social security, this is the part, by this part, this is what I mean. So suppose this is 6,000, and pension on retirement, I have to think about the pensions. When this employee, all of these 5 employee will get retired, I have to think about their pension. So that is also compensation to the employees. Suppose this is 25,000. So what is the total part? Total compensation of employee part is basically what? How much? 68,500 rupees. Now leading to the next part, which is basically the operating surplus, rent, interest and profit. Rent is basically the factor earning of the land. Interest is the factor earning of the interest, and profit is the factor earning of the enterprise. Profit is divided into 3 parts: dividend, corporation tax, undistributed profit. Suppose a company made of, or all the companies of India, or all the farms of India, let me assume, because for the simplicity of the explanation, let me assume that all the company of India have earned a profit of 2,000 rupees. Now out of this 2,000 rupees profit, suppose they are giving 700 rupees to the employees, who are working for the company. So they have distributed this profit to the employees who are working for their company. So that 700 rupees is basically dividend, which is also known as distributed profit, which is distributed among all the employees. Now company made a profit of 2,000 rupees. Company might think that, oh, let me remember, the government has imposed a tax of corporation tax of 300 rupees on us. so we have to pay that tax also, right? So out of this 2000 rupees of profit, government paid a corporation tax of 300 rupees, and the remaining part is saved by the corporate, or remaining part is saved by the company or the firm, that is what, that is of 1000 rupees. It is saved by the corporate, it is not distributed among anyone. This is called what? This is called undistributed profit, or it is also known as corporate saving. Okay. And mixed income. Before going into mixed income, let me show you something. As I have told you earlier also, that I will show you this thing, that as I have told you that there are 4 factors and 4 factors income, right? And if you add these 4 factors income, you will basically get the national income in some way. Now what are those 4 factor income? Rent, wage, interest and profit. Now watch this. Have we got rent? Yes. Have you got interest? Yes. Have you got profit? Yes. And have we got wages? Yes. So we are basically in a way adding that wage, rent and capital, and wage, rent, interest and profit, but in a little bit twisted way, in a more complex way, because the real world setting is not that simple. So that's why there are some extra components, but more or less the idea is same. Okay. Now the third part, that is mixed income, income of the same employed people, self-employed people like me, who is giving you tuitions and getting the salary. So my income cannot be a wage of because wage is basically when service is being given. When, if I am working in a corporate company and I am taking the salary from the employer, then that is wage, right? But in this case I am working independently. I am working as a self-employed person, and my self-employment, I am not taking salary from any employer. So a self-employed's income is counted differently. Okay. So income of any self-employed people, their income is basically mixed income. Income of any self-employed people. Now this income of any self-employed people can come as wage, can come as rent, can come as interest, can come as profit also. If suppose I have a home, or I have a land, and I have given it on a lease, I am receiving rent year by year, then me working as a self-employed, having rent from the land, that is my income, and I am getting an income as a self-employed here, and that income in that case will be treated as mixed income. I can get profit also. Suppose I am delivering water tins, water drums, right? So in that case I am buying those water tanks or buying those water drums, suppose in 35 rupees, and selling them in 50 rupees. My profit is 15 rupees. But that profit, I am not a farm, I am not a producer, I am basically a self-employed person. So that profit will not come to this section of operating surpluses profit, right? That profit will be coming under the profit of mixed income, will be the coming under the income of self-employed. So whenever a self-employed person is earning any wage or rent or interest or profit, that income comes under the section of mixed income. Now if we add this mixed income, compensation of employees, operating surplus, we get NDP at factor cost. By adding net factor income from abroad, we basically get NNP at factor cost. This is a numerical given here. Indirect tax is given, subsidy given, depreciation given, mixed income given, operating surplus given, right? NFIA given, and compensation of employees given, right? So how to find the national income? Basically, if I add this operating surplus, mixed income and compensation to the employees, what I get? I will get NDP at factor cost. What will be the value of NDP at factor cost? That is part A plus part B plus part C. Which one is part A? Part A is basically compensation to the employees. Which one is part B? Operating surplus. Part C is mixed income. So by adding this, we are getting 38,000 and 42, 62,000. That will be our NDP at factor cost. Now NNP at factor cost is basically our national income. How to calculate that? For calculating NNP at factor cost from NDP at factor cost, we have to do what? We have to change this D to N. For changing this D to N, what should I do? I should add NFIA. Here NFIA is negatives, right? So I will basically subtract. Why is it negative? Because that means the amount of money that went outside India is greater than the amount of money that came India. Suppose the amount of money that went outside India is the amount of money that came in India is 900, and the amount of money that went outside India is 1200. So in that case NFIA will be negative, minus 300. So you can calculate it, and it will be 61,700. So this will be our NNP at factor cost, net national product at factor cost, which is also our national income. Okay, so you can easily calculate it, and there are some precautions which you can go through also. Precaution about how to, whenever we are measuring the national income by the help of income method, there are some precautions that we have to keep in mind, that windfall gains like lotteries should not be included in national income. Production for self consumption, suppose I am farming and producing paddy and consuming that paddy as rice by I am consuming it by myself, and suppose my family is consuming it. In that case, that will be not, and the value of that paddy will not be added in the national income, because there is no market transaction happening for that product. Commission paid to the agent is his factor income, so it should be added to the national income, right? Agent working, suppose brokerage taking his broker taking his brokerage fees. Okay, in that brokerage fees will be added in the national income. Income from illegal activities or black money should not be added to national income. That is very simple. Okay, so in this way there is basically another numerical that I want to go through here. Wages given, rent given, dividend given, interest given, mixed income given, undistributed profit given, social security contribution given, corporate profit tax given, NFIA given. We have to find out national income. The question is here a little bit different, but I am just solving for the national income, because if you can calculate national income, you can calculate anything. You can calculate GDP at factor cost, you can calculate GDP at market price, NDP, NNP, anything. So basically this is part C, directly given. Interest, dividend, rent. Okay, so wages is given, right? This is part A, but part is 1, right? Social security contributions, this is part A, but part is 2, and so pension is not here. So if pension is not given in the question, that is part is 3, section 3. If that is not given here, we will leave it. So basically to get the complete part A, we have to add 1 with 2. 1 is what? 1 is basically wages, and part 2 is basically social security contribution, that is 400. So by adding 10,000 and 400, we are basically getting the entire part A, which is known as compensation of employees, and that will be 10,400. Similarly for part B, that is operating surplus. How to calculate operating surplus? It is nothing but rent plus interest, that is given here as I can see, and lastly profit. Well, you cannot see profit here, but the parts of profit are given here, that is dividend, undistributed profit, and another one is corporate savings, corporate tax. Sorry, this undistributed profit is corporate saving, okay, and corporate profit tax. So if I add this corporate profit tax, undistributed profit, and dividend, I will get the entire profit part. Okay, so operating surplus, how to calculate it? You have to add rent, that is 5,000, plus you have to add interest, that is 400, plus you have to add what? You have to add profit. Now profit has some part, dividend, so you have to take dividend, plus you have to take undistributed profit, that is 200, plus we have to take corporate tax, that is what, that is 400. So what will be total operating surplus? That is 5,400, 8,000. That is totally it is becoming 8,000, 400, 400, 800, 9,000. 9,000. And mixed income, that is part C, directly given here as 4,400, sorry. So now if I add these three parts, what will I get? I will get NDP at factor cost. It is done here, as you can see easily. It is very well structured and completely done here. The calculation might be wrong here, but I think the answer will be, the methodology is correct. So you can go through this, and by this method you can find out the national income. Okay, so in the next class we are going to discuss about the expenditure method.